Hi, this is Mike Elliott, and you're watching the Expert Analysis series brought to you by SECFilings.com. In this episode, we'll be talking to Ms. Ruth Hedges, the CEO of Unismart Capital Software. As the creator and key architect of the Funding Roadmap online licensable platform, Ms. Hedges has been responsible for pioneering a new and innovative virtual system for business planning and due diligence reporting on the cloud. Ms. Hedges has worked from the beginning with the principles of startup exemption to promote crowdfund investing and to help get the Jobs Act bills passed. These bills contain provisions for expanding the parameters of crowdfunding. Unismart Capital Software has created the first standardized crowdfunding reporting system on the cloud at www.crowdfundingroadmap.com. Good morning, Ruth. Thanks for joining us.
Good morning. Thank you for having me. It's my pleasure.
The Jumpstarter Business Startups Act, or Jobs Act, which was signed into law by President Obama on April 5, 2012, has far-reaching implications for the U.S. IPO market, ongoing disclosure obligations of emerging growth companies, when private companies must begin reporting as public companies, and the capital formation process for smaller companies. While we're still waiting on the implementing regulations from the SEC and FINRA, the Jobs Act will have wide-ranging implications for the U.S. capital markets. So to begin, I'd like to discuss the immediate impact on emerging growth companies, or EGCs. What criteria do companies have to meet to qualify as an EGC, and how has their regulatory burden changed?
So there's two crowdfunding Jobs Act. One is Title II, which is for accredited investors, and it's done through a registered offering. It's a Reg C offering with the broker. The other one is Title III, which is the one that we're waiting on. Title II starts next week. Title III is the one that I think you're referring to, where issuers have to prepare a business plan. They have to have either self-certified financial statements if they're raising under $100,000. They have to have certified by an accountant if they're raising between $100,000 and $500,000, or they have to have audited financial statements between $500,000 and $1 million. In Title III, there's a cap of $1 million. But you're allowed to go to what is called a funding portal, which is essentially a registered website company with the SEC and FINRA that is then allowed to legally help you solicit your offering to any of the 300 million Americans who are not accredited investors. So it can be either or. The accredited investors can also do Title III, of course. You also have to have a valuation of your, and you have to be able to articulate and explain how you came up with the value of the stock and what the offering is, obviously. You also have to have a list of all the officers and directors that own more than 20% of the company. There's a lot of disclosure. And most importantly, you have to have a large group of fans and followers and friends that you can then market your offering to. So crowdfunding doesn't come with a crowd. You have to build a crowd into this process.
And what are some of the major changes to how companies can communicate with and solicit investors pre-Jobs Act versus post-Jobs Act?
So today it's not legal to go on the internet and actually talk about an offering to the general public. And with what's going to happen next week with Title II is if you legally, properly file the new registration documents, which I believe are Reg C, you will be able to solicit from the internet. You'll be able to put up a billboard. You'll be able to go in a public venue and set up a booth. But you can only talk to and take funds from accredited investors. And those are people who have more than a net worth of $1 million or an income of $200,000 for at least 2 years. To put this into perspective, there are approximately 8.7 million accredited investors in the United States, and today only about 750,000 of them actually invest in startups. So there is an enormous opportunity for entrepreneurs to be able to tap into an entirely new group of people who have never seen these business plans before. And now they will be able to share them in a much broader, wider way using the internet, which has never been done before.
Okay, so now let's get into the implications for crowdfunding. What
Sure.
can you tell us about the new registration exemptions for crowdfunding and any other provisions of the act that will help jumpstart this revolutionary shift in how companies raise capital?
Every year, according to the SBA, 10 million people attempt to start a new business, but only about 3 million of them actually get off the ground. And of those 3 million, we have a very high failure rate in this country. 3 out of 5 startups fail in the first 3 to 5 years. 3 out of 4 fail in the first 3 to 5 years. This is going to change everything because the process for crowdfunding requires a higher level of understanding of your responsibility as an entrepreneur. You're going to be managing a lot of new investors. These investors are all going to be talking to each other on the internet. There's going to be a whole new level of transparency. And in fact, this is a good thing because there are people out there concerned about fraud and concerned about issues related to this new type of fundraising. And in fact, this is going to make it much more transparent. And it obviously, 300 million Americans collectively have over trillions of dollars sitting on the sidelines in money market accounts and IRAs and other things that they're not making any money on. And wealthy Americans have had these opportunities. For example, Instagram was launched, and 560 days later, it was bought by Facebook for $1 billion. Now, if Instagram had been crowdfunded and you had put your money in, you'd be a very happy camper today. But whoever saw Instagram's business plan when they were shopping it around? A few select people, probably in the Silicon Valley or New York, but everyone else in the middle of the country never has had those opportunities. Now they will have those opportunities. You could look at the film industry. You have 10% of the films at Sundance were crowdfunded. If Harry Potter had been crowdfunded and you owned a piece of that franchise, the potential is enormous.
It is, and there's been great success with sites like Kickstarter or these projects. The difference is there's never been an opportunity to own equity in these companies. They had to give away maybe special early versions of the product or things of that nature, but they've never had the ability to actually give people an equity stake. So it's like taking that concept to a whole new level. Exactly.
That's exactly what it is. And it's a fast-growing industry on the reward and the donation side. We went from 1.5 million in 2011. We did 2.7 million last year. It's projected to be close to $5 billion this year. So imagine what's going to happen with the equity. I mean, we've got hedge funds getting involved. We've got self-directed IRA companies getting involved. We've got, like I said, there's trillions of dollars out there. This is not chump change. This is serious, a leveling of the playing field for access to capital. It's eliminating a lot of gatekeepers. It's giving the control back to the people who should have the control,
Agreed.
We have a lot of vacant Main Street in America. We have too many people sitting waiting on corporate America to save them. They can save themselves. They can get together as a group. If they need a daycare in their city or town, they can decide we're going to crowdfund and we're going to put this person into business. We're going to all own a little piece of this daycare, and then we'll have one close by to send our kids to. And we'll have a vested interest in promoting it and encouraging other people to use it. This is transformational stuff. It's never been done before, and it's a game changer.
I couldn't agree more. And don't you think there are the concerns about fraud, but if you look at other online social spaces, or if you look at other products or services that are sold online, or if you even look at things like Kickstarter, there's a vetting process that goes on via peer review. So with this transparency, which you mentioned earlier, that's going to occur now, these companies are going to be subject to that peer review. So someone looking to invest in the company is just going to look at other people's reviews that have invested in the past, that have been investors for a long time.
Or that knew them in college, or that knew them when they were, selling dope in high school, or whatever they may have done. And all of that's going to be out there for everyone to see. That's why this is actually a better way of doing it. If you think about how an angel investor might look today at a business plan that's just arbitrarily sent to them from somebody who knew somebody who knew somebody, and they're sitting there reading it, and then they have to get on the phone and trying to do this due diligence, it's clearly not working because angels and VCs lose money on 8 out of every 10 investments. So, I mean, that's granted. They spread their money across they make enough money, obviously make enough money on the 2 that to compensate for the 8, but it's still not a great way to do business, you know.
And it'll be incumbent upon these companies now to communicate to a degree they never have before, through video, through social media, to really put themselves out there. I mean, I think in the past the problem has been these companies haven't felt that responsibility. They put out the press release, but now they're going to have that incentive to increase their level of transparency and communication, to let people really see behind the curtain, so to speak, about their operations, because that kind of transparency will be the only thing to build credibility to get those investors interested and committed.
Exactly. And in the Jobs Act, they will have to report to those investors at least once a year. Now, we're waiting for the final rules on Title III, which will tell us whether it's quarterly, twice a year, or just once a year. But you can be sure they'll be asking, meaning the investors will be continuously asking what's going on with this company and talking to each other. But in the other side of that is they'll also be out there advocating for this business. They'll be out there, if they just bought a piece of a restaurant, you can be sure every Saturday night they'll be taking half of the people they know in town to make sure they eat at that restaurant. That's the greatest thing in the whole world, to have all of these potential supporters. And if it's a product that you're manufacturing, what better way to prove the concept than to have 100 or 200 people pre-buy this product in the investment stage, and then have the product to be able to use it and then advocate for it around their community and town as well. I mean, no one else, you don't get to do it that way. Usually you manufacture something and then you're sitting there trying to find a few people to beta test it. But on crowdfunding, it's usually part of a reward, as it is today. For example, with the Pebble Watch, I mean, these people wanted to raise $100,000. They ended up raising $10 million in 30 days, and they had 68,000 people who they had to manufacture and send a watch to that they had invented. And that immediately put them on the fast track to becoming a Timex, for example,
And Ruth, the last question I want to ask you, of course, is tell us about CrowdFundingRoadmap and what you've done there.
So I am a software developer. I invented Funding Roadmap, which has now been another new version. It's been updated, Crowdfunding Roadmap, so that it's compliant with the Jobs Act. It's a do-it-yourself, multiple choice, plug-and-play reporting system and planning tool. It allows you to compile all the information that you would need to share with investors, with the SEC, and with the funding portal. And it lives and breathes for the life of the company. So you can continuously keep it updated because it's standardized. It's easy for multiple amounts of people to immediately log in and review it. And it's really the go-to standard. We're also doing an event next month at the M Resort, October 14th, 15th, and 16th. It's the largest crowdfunding convention in the world. And we have industry leaders coming from everywhere. We have people coming from Singapore, from Australia, from the Netherlands, from Italy, and we are Canada, the UK. We have Congressman Patrick McHenry, who was instrumental to bring the first draft of the Jobs Act to the floor of the House, and we're giving him the Crowdfunding Visionary Award. We have people coming from Hollywood. We have the executive producer of Innocente, which she crowdfunded this documentary, and then she won an Academy Award. So it's a very exciting event. And we hope everyone will come and join us.
That's great. That is very exciting. Ruth, that's all the questions I had for today. Was there anything else you wanted to add before we close?
No, well, I just want to, I do. I would like to encourage people to understand that this is a time-consuming process. It's not an impulsive thing you do. You can't wake up one day and decide to sell securities online and in a few weeks think you're going to set up a crowdfunding page and then you're good to go. There's an enormous amount of work to be done in terms of compliance preparation, as well as the most important thing, which is building a big enough crowd. There's a very high failure rate on Kickstarter, Indiegogo, and the other hundreds of funding portals around the world because people don't understand they have to have lots of fans and followers and friends. This is going to be 2 or 3 or 5 times more complicated when those friends have to be willing to register as an investor with the SEC. So today you can go to Kickstarter, put your credit card in, and you can give somebody $50, $100. It's a 90-second process. But when the SEC comes out with the rules, you will have to go to a specific site or go through a funding portal registration process and give them your driver's license and social security and all these things. Well, some people may go, whoa, I don't know if I'm interested in doing that. I've never done this before and I'm not comfortable doing this. So that means you have to have a much bigger crowd. From the whatever crowd you would need to do on Kickstarter, you now need a much bigger crowd to do securities crowdfunding. And so what we're saying to people is start now. Don't worry about the SEC and FINRA. They'll get to their thing when they get to it. The more preparation you do now, the greater chance you'll be a first mover when it's live, and you'll get to capture the groundswell of excitement that's going to happen when this actually is actually operational. So we encourage people, to contact. Obviously, Crowdfunding Roadmap helps you do that, and that's why we're trying to build a pipeline for the industry.
Ruth, thanks for your time. It's been a pleasure.
Thank you so much. It was great.
We've been talking to Ms. Ruth Hedges, the CEO of Unismart Capital Software. As the creator and key architect of the Funding Roadmap online licensable platform, Ms. Hedges has been responsible for pioneering a new and innovative virtual system for business planning and due diligence reporting on the cloud. To find out more, please visit their website at www.crowdfundingroadmap.com. Thank you.